Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everybody. Welcome back to another live stream. Hope you're doing well. Happy Thursday. We've got some interesting stuff to talk about. We've got markets moving here. Of course, the rally in stocks continues. We have seen probably one of the most impressive rallies in many years, actually. I was looking at this. I saw a stat that it was the strongest 1 month return since like 2020. So we've had a really incredible run up in the stock market. And with that brings a lot of FOMO for many people, myself included, because while I am personally long many different stocks, in terms of a cash allocation, I'm still sitting on a good bit of cash. Now, if you don't know what that means, basically, I have a brokerage account where I buy shares, ETFs, stocks, options, etc. within. And so I'm sitting on somewhere around 45% cash, which is kind of painful when you're sitting in cash and the market is doing this. So am I feeling some FOMO? Absolutely. Being fully transparent, I'm feeling a little frustrated that I didn't get any sort of pullback opportunities. But the truth is, who cares? Not the market. The market certainly does not care that I missed out on a move, or if you're in the same boat, doesn't care about what we want or what we feel or what we think or what we, if you think it's rigged or not, it doesn't care. The end of the day, the market is the market. It's going to do what it wants to do. And sometimes you're going to miss moves. So there's my copium for the day, a healthy dose each day, as long as this rally keeps going. So in all seriousness, there is nothing that you can do to chase this sort of move. In my personal opinion, like there's no logical thing that I can do up here. I cannot justify going long here because I think that optimism, excitement around stocks has gotten pretty high again. I think that especially when you look at the narrowness in the market rally, and I don't want to make a bear case here, but I want to make a case for why I can't justify chasing this market move. If you take a look at semiconductor stocks, which are really at the center of this is the big piece of it, right? This is where the action is at. Semiconductors. I don't know if you guys saw this yesterday, but AMD absolutely skyrocketed, right? 19%, 20% in a day at one point. Absolutely monstrous move. And that's following, it had already gone up 80% before that. So, you're getting some unbelievable moves in the markets right now. Stocks specifically in the AI related part of the game are seeing monstrous rallies. And so you're seeing the Nasdaq get carried higher by that. And so it can be very easy. We had a conversation in the Discord yesterday about, is chasing just the way to go? Is it better to just chase these sorts of moves? And we talked a lot about recency bias and how it can feel very loud when you get this kind of move, and it can kind of naturally bring you to the conclusion, well, maybe I should just be buying. Like, maybe I shouldn't wait for pullbacks. Maybe I should just buy the breakout because clearly it worked, right? And that is true in this particular case and example. But as traders, you have to think in I used the word template mindset yesterday, and I'll stick with that. A template mindset, what I mean by that is like, you have to visualize, okay, if I'm trading a strategy, hypothetically, I'm going to take the same general trade setup thousands of times into the future. And if you're doing that, then naturally the next question is like, okay, well, in this case, it did this. But if I do this 1,000 more times, how often is it that I'm going to get this kind of move, in which case the chasing would have been smart, right? With hindsight in our favor, yes, chasing every single green day would have been the right strategy in this particular example. And us as traders, we do this. We look at this and we say, well, clearly we should just be chasing. But you're ignoring a more logical, repeated study example where most of the time the market does not do this kind of move, right? Most of the time you do not get these one directional thrusts of this nature. You usually get markets moving in waves. And so if you chased every rally here, you could very well take a good thing and mess it up. In most scenarios, I would argue that's more likely what you're to do. If you're chasing every single rally, in this example, you look like a hero. But I would argue in most scenarios, it's not going to look so heroic to chase every single, green or red candle. So, yeah. Hey, Belent, good to see you, my friend. Dear Nick, having 45% cash on the sidelines actually gives a lot of confidence. After all, no one knows what might happen next. Yes, exactly right. And I'm not, truthfully, this year has been a phenomenal trading year for me. While I've kind of missed, I definitely have missed a lot of the action on this particular rally. I played gold. I'm really happy with how I played gold this year because I pretty much captured the January move and then got out of there, which feels very good. But the point is, you're just not going to catch everything, and that's perfectly okay. Like, in fact, you actually have to accept that you're not going to catch every move, because if you don't accept that, then you're going to beat yourself up more than you need to about things like this. So, yeah. Nick's been saying waves a lot these days. He's been bitten by the waves bug. I mean, market moves in waves is that's like the first week of trading school, right? Is like the market usually does not move in one directional moves. However, sometimes it does. And so never say never, right? That's why, I also am not a fan of just shorting something that looks overextended, right? Sure, most of the time, yeah, this is probably going to pull back, but that doesn't mean that it has to. And so if you draw the conclusion it has to pull back, it has to move in a wave, right? Wave up, wave down, it doesn't. And yes, there will be. If you're looking at Nasdaq, there will be a wave down on the Nasdaq. The question is it now or is it 5% higher from here? We don't know. So for me, the Nasdaq looks really strong. I remain tactically bullish on stocks, but I just don't like the risk reward to buy them right now. I hope that makes sense. I bought several different stocks. I went from, again, like almost 100% cash all the way down to like 50% cash. I bought shares of Amazon. I bought shares of Meta. I bought shares of Uber, Visa. Like, I've done okay with those purchases. I just wish, well, those are dangerous words. Let me rephrase that. I was just in the middle of accumulating shares when the stock market started rallying. So I didn't get my full chance to build all the positions that I want to. But again, patience, I think, will pay off. There will be pullbacks. You just have to be patient. Anyways, take a look at this. We have unemployment claims this morning coming in a little bit better than expected. This is another round of decently healthy jobs data for the U.S. You have unemployment claims have been just in a downtrend. This is good. Like, that is solid jobs data so far. Now, of course, tomorrow is the big day where we have the non-farm payroll event, which will matter tremendously to how things play out in the dollar, how things play out this week for gold, et cetera. So tomorrow's the big day when it comes to jobs data. However, this is still confirming the Fed's latest kind of shift into, okay, we have inflation expected to stay elevated due to the Iran stuff, but also you can lace in there the jobs data has been fairly strong and resilient for the US. We've categorized this in our system under jobs market bias, getting a very bullish rating for the market. And again, that is subject to potentially change if you get a weak print on Friday. But we had a smash hit jobs number. And this is, by the way, it's part of the reason the dollar has been mostly strong. It's also been a reason for yields remaining elevated, right? The Fed going on hold. Stronger labor data is kind of driving that, or a piece of the action. So you look at unemployment rate, 4.3%. That's nominally a very good number. Weekly jobless claims came in at 200K versus 205 expected, so that's better than expected. ADP this week was a little bit soft. Jolt's job openings were pretty much on the money. They're pretty much in line with expectations. So you look at that and you say, okay, well, the jobs data is not crashing. So that story of, jobs market falling apart, could that come into, play tomorrow? Sure, maybe it does. But as we look at things today, the jobs market data isn't crashing. However, you've lost a lot of the geopolitical worries story, which has been a part of the reason the dollar has been going up, right? So now dollar is back. I mean, you can't make this stuff up. We have stayed in a range for dollar for like a year plus. So dollar index really hasn't moved a lot. If you're wondering why currencies have not been particularly interesting in the last, year, this is why. In fact, my friend Chris Pulver, him and I were talking about this. You can see it very well in the bonds market too. Take a look at TLT. This thing has been just a range-bound market. And range-bound markets, what that does, in the bond market, which is by the way, it's like the cousin of the currency market. Bonds and currencies, it's all based around monetary policy. So when you have this happen in bonds, yields going nowhere, Fed on hold, it's just not the same exciting environment for currency land that, when the Fed was hiking interest rates in 2022, like that was an environment where currencies were moving. Like there was just a secular strong upward trend in the dollar during that time. Then in 2025, you had the dollar kind of fall apart. You can see had a huge downside move in 2025 because, again, labor data was cooling. The situation with basically interest rates were expected to come down for a while. And then really they've just gone sideways, right? So the dollar story has just gone to sleep for a little while. So anyways, if you're watching the dollar from a longer term basis, we've said this for like a very long time now, you're looking for moves either direction, downwards or upwards. Longer term, I've pointed out that I think the dollar has some strength to it simply because of our relative strength study that we've done on some of our key macroeconomic metrics. So if we go economic strength index, the dollar is top of the list here because just taking a simple comparison score, we've built a metric here that looks at GDP, unemployment rate, interest rates, inflation, CPI, and real yield across the major currencies. What you can see here is it then creates a score factoring in all of these categories to show on a nominal basis, not actual versus forecast, but just a nominal basis, which ones are showing the most strength or the most weakness. So when we look at this, dollar in the short run, I don't really have a strong bias. We could move lower, we could move higher. I think recently economic data has been a little bit more mixed versus expectations. On a longer term basis, though, the growth is in the US. The data center stuff is powering GDP growth, by the way. Like that data center stuff, I know people like to think like, oh, the stock market stuff doesn't impact me if I'm a currency trader. It's not really true. When you're looking at the US dollar, the US dollar is also made stronger when innovation, investment, build out, infrastructure is being conducted in the US heavily. So there is that strength. There's that the US markets are the place to be, right? In the global stage, capital markets, I mean, there has been numerous companies that, what they do is they IPO, they bring their company to the US markets because that's where the action is, right? That's where the investment is. That's where the flow of global capital goes, is the US markets. That's a tailwind for the dollar. And so I think, as this AI stuff plays out, if you think that there is legs to the stock market, that's why there's not a perfect inverse correlation. Sometimes people think dollar strong, stocks down, dollar weak, stocks up. It's not a perfect correlation. In fact, a lot of times the dollar and the US stock market can move up together, historically speaking. That's why also there's like very little correlation, like the 10-year yield and the stock market. They actually don't have a huge amount of correlation like you might suspect. Anyways, GDP growth, again, very strong for the US. Unemployment rate relatively strong versus peers. Interest rates elevated, that's offering foreign investment attraction. CPI 3.3%, kind of middle in the pack. So overall, US dollar looks from a longer term perspective decently attractive to me. But again, you might fall asleep waiting on it because it's gone nowhere for a long time. But we'll keep an eye on it. Oil, another story that we've been following. I'm feeling at least better about my decision or my stop out. I got stopped out on my oil longs, and now oil is lower today. So at least that, I'd feel a little bit more frustrated with it if it shot higher, although that's happened to me many times. It's part of trading. I am watching this level around 87. I'm curious to see if you do get another shoot lower, if there is buyers that step in at this area. We've marked this territory as very important for a simple reason. Basically, if you have a scenario in which de-escalation is really being bought by the market, like the market really believes it, then I think you probably break that level. And if that happens, from a technical analysis perspective, that kind of looks like lookout below territory to me. Here's why. At that point, you could start to get the pattern traders saying this is a head and shoulders pattern, a technical break of critical support that we've held for several months. Then I'm kind of with you on the, okay, oil looks structurally bearish. Nicely explained on the dollar. Thank you very much. Appreciate you. By the way, if you guys are enjoying the show, give me a thumbs up button on the stream. I think we have like an abysmal number of likes down there. The live streams get so little love in terms of the like button. So if you could help me out, hit the likes button, subscribe if you're new, turn on the post notifications, all the YouTube stuff helps to grow the show and share it with more people. What are your thoughts on euro dollar? I'm more long position. I'll talk about euro next. So let's look at oil. From a structural technical analysis perspective, what I am looking for, like I said, if we're going to get bearish on this, which by the way, this would be more of a risk on type of input, lower oil prices. I think you watch the 88 level, 90, 88, this general area. We've seen buyers step in. So I'm not necessarily saying I think it's going to break that level. I'm just saying if it does, then I think the bears have a serious case to make, or they've made a serious case. Liked. Thank you very much. Appreciate you. April was nasty, took more L's than ever before. It's part of the game, man. Trading is tough. It is way tougher than people think it is, and that is just the reality of it. So where are we going to go? We're going to go euro dollar. So by the way, just to wrap up things on oil, when I look at oil, asset scorecard, oil, I was looking at it this morning just to see, as we approach that level, we do have a +4 on EdgeFinder. Technicals look a little bit rough on the 4-hour chart. In fact, I'll come back to euro dollar, I promise. If I go to oil, 4-hour, technicals look a little rough here. So I went long over here and then stopped out. Price has gone lower. We did bounce, but we saw that bounce get faded. Sellers came back in, continue to push this thing lower. So the 4-hour chart does not look very promising. I am, however, interested in seeing how price reacts to this level that I've got marked in green. Because if you filter out to a weekly chart and we start kind of finding support once more in this area, I think this could be a bigger picture break higher. Of course, that depends heavily on what happens geopolitically. But I think I can't predict that stuff, right? I can't predict what's going to happen geopolitically. But what I can do is I can look at the risk reward and say, look, this level, for whatever reason, from a technical basis, the buyers are very aggressive there. So I think if you're a seller watching oil, you watch the reaction to this level. If we fail at this level, that's a very positive sign. That would be where I think you're going if you completely topple over and close below these candles. So I'm watching that. right? But if you're a buyer and we come down to this area and you get like a sharp reaction, maybe an engulfing candle on the 4 hour, something like that, the risk reward starts looking interesting to me. So I'm going to keep an eye on it. I don't know if I'm going to take another long position. I'm going to take it day by day. If the setup comes onto my screen, if oil looks good, I may take another stab at it, but I'm not forcing anything and just going to wait for it. So yes. By the way, we've been doing some cool stuff over on our website. Just wanted to show this off. If you guys are looking for some free education, as well as some free tools, head over to our website, a1trading.com. I'm going to drop it in the chat here. Bookmark this page. Use our tools that we've been putting on the site for free. We've added a couple cool stuff. Like, for example, we have free retail sentiment. This is completely free to use. You can pull this up on your own, use it on your side of things. And I'm telling you, this is like absolutely free game I'm putting you on right now. We've been on a mission to offer more and more free stuff on our website. So if you head over to our website, you can get free access to retail sentiment data. We also have free COT data over there. We also have some great sign-up perks for prop firms and brokers. And we have a list of free courses that we spent a lot of money building these things. We hired help to, we had like interns that worked on these for a whole summer to put these all together. But basically, we have free courses on our website. These things people would charge you money for on other sites and pages and stuff, etc. But we don't charge for courses. Courses are free on our site. Head over to a1trading.com. I'm telling you, if you take 10 seconds to go bookmark this page and spend some time on our website each day, you will greatly benefit at no cost to you. So that's our goal. At the end of the day, that's our marketing strategy, is we try to help people genuinely in their trading. And the hope is that someday you see the value in our tools and you purchase them from us. That is our marketing, full transparency out in the open. So head over to A1 Trading if you're interested in that. And also, if you're interested in getting access to a EdgeFinder trial, as well as our EdgeFinder course, here's some more free access to that course. So if you want EdgeFinder stuff, EdgeFinder trial, EdgeFinder course, link is in the chat right there. And then last free game, join our Telegram. We post daily updates on what's going on in markets and ideas. Great idea on the free stuff. You'll get a lot of more traffic on the site. That's been our strategy the last 5 years, 6 years. It's worked really well for us. We've built a wonderful community. A lot of people, at the end of the day, a lot of people don't take free stuff seriously, but a lot of people do. And to the people that do, salute to you. Seriously, that's been our marketing strategy for years, is just offer more and more free stuff. And it has worked great, because a lot of times what that does is it helps people genuinely, and then they are thankful and they become customers. Like it's a marketing strategy that works. Helping people genuinely works. It's awesome. Keep it up, Nick. A1 can seriously help beginner traders. Thank you, Bala. Appreciate you, man. Yeah, I mean, at the end of the day, these streams, our website, our courses, our Telegram, our Discord, like our strategy is give it all, man. Give it all. And then, of course, if you want to buy EdgeFinder, that's our premium product. This thing's $1+ million in investment on our side. It's a wonderful tool. Buy it someday. That would be the greatest thank you could do if you like our stuff, is to purchase our premium tools. You don't have to. You could sit around and enjoy the free stuff as long as you'd like. But either way, we appreciate you being here. I've never learned anything, learned so much from any other channel. Thanks, Nick. Thank you very much. Appreciate that. Much respect to the A1 team and the work you put into the stream, education and tools for traders. Absolutely. I mean, it's not charity work, right? It is a way for us to sell stuff. But wholeheartedly, genuinely, I know how hard it is when you're first getting into trading. You don't want to spend money on everything. Our hope is that we can genuinely offer you help first. And then maybe someday you purchase something from us, and maybe you don't. But, I know I'm passionate about trading. I'm passionate about seeing traders improve themselves. No one can do the work for you. But hopefully, if you tune into these shows every day, if you take this seriously right now and you take advantage of the stuff on our website, like I'm telling you, there is so much genuine value, not just put together by me, but by my team, by all of the show hosts here. It's our strategy. We're banding together as traders to try and, make a difference and help people out. It's a valiant effort, and it feels good to do. So thank you to you guys for being here. All right. Now that I got all the sappy stuff out of the way, let's get to that euro dollar I promised. Okay, so euro dollar. Let's talk about it. Euro dollar, we have kind of an interesting chart here. I want to take a look at the scorecard for euro. So euro is going to fall under the neutral camp for me, +3 overall. Technicals are looking solid. I think the chart looks good. Crowd sentiment is bearish. I've got to look at crowd sentiment for you guys in a second. Economic growth comparison, slightly mixed, slightly favors euro, at least in latest economic data. Inflation data comparison, slightly bullish towards euro. Jobs market, bullish towards dollar. Okay. Overall +3. So there would be no trade for me here. But from a technical basis, we could mark this up anyways. You've broke out of this support resistance zone, now turned potential support. You've also found really clear support here on the euro right around here. This wouldn't be a chart that I want to short. I think the technicals definitely look more bullish. So I wouldn't want to short euro. If you are bullish, you've got a couple levels. So candidly, I am not bullish. I'm neutral on this one. So there's no trade for me here. But from a technical basis, this kind of move, if you are bullish, assuming you are bullish, these would be two spots of interest in my personal opinion. You have a pullback into the 116.70 level, and you have the 1.18 level. Both of those are, from a technical basis, they look good. That's all I can give you, because at the end of the day, I don't like the underlying fundamental story. Because what I do when I'm looking at currencies, right? We have a surprise index for active trading. This is my favorite way to analyze macro for currencies. What this tool does is it looks at fundamental data for all of the majors, and it says which currencies are experiencing a high degree of economic positive surprise for the currency. Let's say, for example, currencies that are getting strong scores are experiencing labor data beats at a high rate, inflation that is higher than expected. Their yields are moving higher rapidly compared to expectations. Their economic growth metrics are stronger than expected. Currencies that would see slower scores or lower scores on this list, conversely, would have the opposite. They'd have weaker than expected jobs data coming in, weaker economic metrics than expected. And right now, the weakest on our list is the Kiwi dollar, and the US dollar is neither of these are in like straight up super bear territory. But remember, currencies are all relative. So if you're looking at the euro, that's why I'm not going to short, or I'm not going to go short the euros, because the euro looks relatively upbeat versus other peers. However, the dollar is not a clear enough short for me to bet against. Does that make sense? That's basically why EdgeFinder's scoring matrix, when we went back to that Forex scorecard a second ago, that's why this thing's getting such a neutral read, right? It's looking at this stuff and it's saying, all right, some things are positive, some things are negative. There's probably better trades out there. That would be my take on euro dollar. Again, to each their own. That's the way I look at markets, is I look at macro fundamentals, I look at crowd sentiment, and I look at institutional activity to build a conclusive bias. And that is what EdgeFinder does. So we'll see. I think we have someone else coming up on the live stream. I'm just checking the... Also, if you're a fan of the show, if you're a regular, make sure you bookmark the website too, because if you do the live stream button here, you can always check who is coming up on the show. So right here, you can see we have Miko, we have Marco, James, Tiger. That's our lineup for today. We've got some great traders taking over here, and we'll see whenever Miko's not yet arrived, but he will likely be here momentarily. Anyways, again, stocks remain strong. I've got a really cool tool that we're building behind the scenes. I am so pumped for it. It's for Stockbox. We're going to be building a heat map or a summary screener of how earnings are beating or missing expectations as a collective group. I am so pumped about it because I love that sort of stuff. It's one of the main reasons why the stock market is up so much, despite all the spooky headlines, gas prices, Iran, etc. Earnings are going crazy right now. That's why stocks are going up. And that's what matters most to stocks. ISRG, I don't really look at individual stocks very often on this channel just because this channel is more for, currencies, commodities, indices. My other channels where I talk more about stocks. If you want to find me over on Trader Nick Stocks, I'll be making more videos there. ISRG, I like it, but I'm not going to go in detail on it here. Again, I segment my two channels because as a YouTube creator, if I talk about subjects that are not very relevant to the channel, it causes the channel to do worse. People leave the video, etc. So I try and stay on the sidelines with it. Nick is not accepting oil loss. Bro, I have accepted it. I have totally accepted it. Yesterday, I took a $11,000 loss. If you tell me that's not accepting it, I don't know what's accepting it, man. I've got no setup on oil right now. I've got a neutral reading on EdgeFinder. So I will take a trade if there's a setup, but I don't have one right now. So let it go. Okay, are you trolling me, bro? Don't worry, I've taken my L. I've taken my L in style. I posted all about it in my videos yesterday, all over my Instagram. I don't know how more transparent I can be about taking an L. Everyone takes them. Some people show them, some people don't. I'll do my best. I'm not always perfect, but I'll do my best to always talk about, when I have a wrong call out. At the end of the day, I'm not here telling anybody what to do with their account. I'm just sharing my journey, my thoughts as a trader. If you want to hate on it, do your thing. It won't take any sleep off my nights. Anyways, up next, we've got Miko taking over the show. If you guys are more into a little bit more on the technical side and a lot more charts in a lot less time, I take my time. I crawl through some charts sometimes. I got to be a little quicker with it. But if you're interested in technical analysis and finding trades that have strong levels of confluence, trend following, looking for proper pullbacks, and really getting into the technicals, then don't go anywhere because our next show host, Miko, he will be going over several different technical charts that he's watching now. Coming up next, we've got Miko Audu just after this quick break. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Okay guys, hope everyone is doing well. Glad to be back. So as always, I'll go through a bunch of different markets, some I'm looking at. Of course, what I'm looking at, I will share any markets I'm currently trading as well, what I'm staying away from. If there is any particular markets you guys are interested in, want my opinion, feel free to drop in the chat. Excuse me, more than happy to take a look, and of course any particular time frames as well. But we'll start with the DXY. The dollar hasn't been particularly exciting, especially over the past, well, quite a long period of time actually. Several months we have been pretty flat. You can see the larger range for the dollar. I've just been keeping an eye on this range. I'm not so much looking for any meaningful or any kind of big swing trades on the dollar. We're very flat. I'm not really seeing much trending opportunities, but what I am paying attention to is to see when price does reach the extremes of the range, so either the high or the low, and of course whether we break out of that. And at the moment, we're kind of in between everything. Price is in the middle of the range, notoriously a place of indecision, no real clarity, no real dominance between buyers and sellers. We're quite equal at this moment. So if I'm looking for opportunities on the dollar, it's going to be very, very short-term trades. Looking at mean reversion, just looking to kind of buy low, sell high, position myself well, and not try and stay too much in the market. No necessarily trying to predict where price is going to be, especially from a technical perspective. So we've seen a bit of bearish momentum this week. Seen some downside on the dollar. Well, initially started a bit bullish, but predominantly we've seen a lot of downside. So am I looking necessarily for any big continuation, any follow through of this bearish move? Absolutely not. Can we see that? We can, but I wouldn't necessarily try and bet on that. What I am going to keep close attention to is what we do to this support level. And again, I'm not going to be looking for any really crazy breakout, but if it does break, that does give a bit more significance to that bearish move, and I will be looking for some short-term sell opportunities on the dollar, maybe some buys on euro, some buys of pound, etc. And if you go take a look at pound USD and euro, you can see those markets are equally choppy as well, especially on the higher time frame. And again, when I do expand to the daily, the weekly chart, I'm not necessarily looking to try and plot ideas necessarily. I don't trade on the daily or the weekly, but it's good just for that overall context in terms of what price has been doing, for the past, few months, few weeks. And it does really allow for good kind of decision making, especially when you're following intraday or intra-week moves. Because if you're looking for trending opportunities on a hourly chart, it's nice to know if you're trading in a range in the bigger time frame or you're trading in a trend on the bigger time frame. Both those opportunities are very, very different. And you can see for pound, equally as the DXY, we're in a larger range as well. Price is kind of just pushed past the midpoint. Looks like we're pointing towards slightly the upper end of the range. This is the midpoint, just using the Fibonacci to map that on the chart. You can see we're pointing upwards here. So we could be looking at a test of the upper extreme of the range, and that's really what I'm going to be focus on if we can get there, because that would lead to bigger opportunities, whether we're looking at failed breakouts and price reversing back down again, or in fact a breakout and maybe a big trend can form. And that's the type of opportunity which I want to be looking to swing trade, looking to position well, maybe trail stops and hang on for a decent length of time. In between, it's more mean reversion, more short-term opportunities. In terms of what I'm actually trading right now, I took a trade last week, US30, actually just before I hopped onto the stream last week, actually. So far it's going okay. We did have a pretty significant pullback as we came into this week, but momentum has picked up again, or to a degree. And we're testing highs again. So US30, the plan for this trade is just simply, can we get back to the all-time highs? And once we do that, if we do that, then I'm looking to remove risk and then trail from there onwards, because that's basically the objective complete. The reason why I was very keen to trade US30 is because the S&P and because of the Nasdaq, they've already made all-time highs, and in fact they've blown past them. The S&P, Nasdaq, they've absolutely blown away from their prior all-time highs, and they've been very, very bullish. And US30 has been lagging behind. So the whole plan with that trade was, can I find the catch-up opportunity, the lagging opportunity to catch up with the Nasdaq, to catch up with the S&P? Now, I'm not expecting US30 necessarily to explode like this. It could do, but I do expect that kind of momentum to sort of pick up, potentially, at least get back to the all-time highs, which is the main objective of the trade. So once we get there, if we get there, I will look to remove risk and then trail and see what we can do. Maybe we do have another explosive breakout. Maybe we don't. Maybe we come back down. But in terms of opportunities, that's been the most attractive out of a lot of the markets I'm looking at. Like I said, FX pairs, I'm not really seeing much opportunity. I was looking a lot at dollar yen. I was looking at a lot of dollar yen last week, but then we had the the yen intervention. So that's a little bit awkward now. I'll talk about that in a moment. But this is currently the only position I'm just going to manage and see how we get along. And once we get there, I'll see if we can remove risk. But yeah, dollar yen, I was quite focused on last week as well. But yeah, this happens. I was like, whoa, let's take a back seat. We don't want to be jumping in too early. Now, I'm still quite bullish actually in dollar yen. I'm still looking for buying opportunities, but just not in the same fashion I was last week. Now, my target for dollar yen is still very much this high here, which is 161.9, which is our high from 2024. I still do think as long as market structure continues, there's a pretty good chance that we're likely to go and test that high. So I'm very much looking to see if I can find a buy somewhere. Last week, I was looking to see if I could find a buy in one of two places, either the breakout of this range, which we did see, and I was looking for the retest, but of course we had the mini crash there. And then I was looking for the second opportunity, which of course was the retest of the low of the range, but of course we broke through that. So yeah, I'm looking to see if we can recover this and get back above the range. That becomes a nice buy. And then maybe the high there as well, but we can discuss that probably in later weeks. But I'm still very much a bull. I'm just waiting for things to settle. There could still be a bit more downside for dollar yen. I'm not really interested in trying to catch the bottom. But if we see some signs that it looks like price is bottoming out, then yeah, I'm more than happy to find some longs. Okay, yeah, we can take a look at dollar CAD. Yoshi, nice entry. Appreciate it, my man. Yes, we can go for Euro Aussie as well. Yeah, dollar yen longs, I'm still very bullish on it. Again, purely from a technical perspective, things can change fundamentally. The yen can still be intervened. We can still see more yen strengthen. If things change, I'll change with it as well. I'm very, very much trying to react to price and react to what the market is doing. I'm not necessarily saying I'm bullish because that's just my be all or end all forecast. Is because market structure is still pointing up, and that's predominantly the reason why I am bullish. If price was to start to bleed and take out this low, that bias wouldn't be true anymore, at least for me anyway. So I am pretty bullish on dollar yen, looking for longs, not necessarily try and catch the low, but once it looks as if we're putting a bottom in, especially if we climb back above that high, yeah, I will be looking for longs again, just looking for the trend to continue as it's done for quite some time now. I'll go for dollar CAD, then I'll take a look at Euro Aussie as well. And of course, any other requests, you could just stick it in the chat and I should be able to get to it. So yeah, as for dollar CAD, I mean, in general, as I said for the USD pairs, keep it short and sweet, not looking for any meaningful swing positions unless you're positioned well within a range. Of course, if you're selling high within a range, you can afford to hold on to that. Likewise with buying low. If you're in the middle, that's the more awkward location. I would advise to be very careful holding positions there. But you can see for dollar CAD, looking at the bigger picture, I'll get to the low time frames in a moment. You can see predominantly, again, very, very flat. So if you're asking yourself, where do you want to be looking to buy? Where do you want to be looking to sell? Well, again, it's going to be in these locations. And it doesn't mean it's perfect. Doesn't mean you'll buy there and price was just 100% certainty or bounce, but you position well for it. You can place risk well, and if it does play out, your reward is most likely going to be many multiples of your risk as well. So that's a bet that makes sense. In terms of the more intraday price action, yeah, there has been some nice bearish momentum. Maybe there's still a bit more downside. For us to really coming back and retest the support, and maybe we turn around from there. But if I was looking to get involved with dollar CAD, I'll look probably for some short-term sells off this high. We've seen some significant rejections in the past couple of weeks. If we get there again, reject well again, there's a likely chance we can see some more downside. Would I bet on this? Again, no, I would keep it short and sweet. I don't really have much confidence in that bearish trend. If this was like the daily chart was trending down, the 4-hour hourly, we were seeing synchronicity between time frames, then yeah, I can afford to be a bit more aggressive or confident with that trade. But because this trend is only since the high there and it doesn't have much significance, I'm not going to try and push that too far. So in terms of short-term opportunities, I do like the level here, 1.37. Price has been respecting it quite well. And in terms of a bigger buy, more reversal type trade, I do like the 1.355, 1.35 area for a long. So that's kind of how I'm looking at dollar CAD for now. In terms of Euro Aussie, so Euro Aussie, we actually talked about Euro Aussie last week, and I said we do have a trend in the higher time frame. So this is kind of a nice kind of opposition from what we've seen with dollar CAD. It's a complete different market structure on the higher time frames. Here we do have a predominant trend on the higher time frames. Daily chart has been consistently trending down. We have had a quite significant pullback recently, but nothing that has changed structurally. So I would be pretty bearish for Euro Aussie, at the very least for a pushback to the prior low, which we're very close to, but I'll still expect us to arrive there. So for Euro Aussie, I would be looking at selling opportunities. Now, we've just had a push this week, so I'd want price to pull back, perhaps even coming back into this kind of territory, which was the high from last week. If we can, for whatever reason, have another pullback, that would be nice. Place some stops above the high there. That improves my risk reward, and we've still got a very likely chance that we do hit that low anyway. And then once that low has been tested, maybe price bounce, maybe we break through, who knows? But the likelihood is momentum is still very much with the bears. So I want to be trading in that direction. And where do I want to place my stops? Well, above significant structure where I can be relatively safe. And above that would be this high here, potentially this high, but I'd rather be slightly higher up. You can always take a couple stabs as well. So yeah, with Euro Aussie, I would be pretty bearish with this one. Higher time frames are pointing down, lower time frames are still pointing down. Resistance has been pretty consistent as well. I do like what I'm seeing with the shorts here for Euro Aussie. Not for anything crazy, because we do have significant support below us. Yeah, this is where price had its last significant pullback. But yeah, at the moment, bears are in charge. I would be looking at shorts there in Euro Aussie. What do you think of Euro NZD? Okay, we take a look at Euro NZD as well. Euro is a little bit strong. But, I mean, Aussie has been stronger than Euro, of course. The chart is showing that. So I wouldn't mind shorting Euro Aussie, because Aussie has been a lot stronger. So you got the stronger currency there. USD is a little bit different, actually very different, because you can see categorically the market structure isn't the same. Euro Aussie has been on a consistent downtrend. Euro NZD, you could argue, has been in a consistent uptrend, of course, as of late. Slightly bearish, but overall I probably would say it's pretty flat. So I wouldn't be that confident looking to sell Euro NZD. If I'm going to sell one of the two, it would absolutely be Euro Aussie, because that's what structure's been doing consistently for some time. Euro NZD, yeah, we have seen a bit of downside, but not to the same degree, and overall it's been pretty flat anyway. So we're seeing buyers and sellers have pretty equal participation right now. And when that's the case, I want to be buying as low as possible or selling as high as possible. And that would mean looking more so in these areas, 1.95. Doesn't mean price is going to bounce on a dime there. We could very much dip slightly below as well. But this is predominantly the location where I would say that's sensible for buys. You're looking for reversal opportunities, double bottoms, looking for a break of structure. That's essentially the location where that would make sense to me. Looking for buys here, yeah, you might see a short-term bounce. The market is quite choppy, but I wouldn't want to be positioned there for anything longer than a day or two, because I'm not really trading for from anywhere of significance. We've broken through some local support there on the 4-hour chart. Perhaps that might mean a bit more downside to come, maybe for us to come and test that low. I don't see much opportunity there. If I'm looking to sell, like I said, I'd focus on Euro Aussie. Buys, on the other hand, make a bit more sense once we reach 1.95 again. So yeah, you are right. Euro has been on the stronger side of things, but against Aussie, not so much. Against NZD, a little bit. Not currently, really. Of course, we're pushing down on the day and yesterday too. And again, strength is relative as well. Euro could be stronger than 8 out of 10 currencies, and the other two it's not stronger than. Those are the two that you don't want to be looking to to buy it against as well. So I would say be careful with NZD and Aussie as well. Yes, we can go through pound CAD, we can go through Aussie dollar as well, no problemo. So yeah, with pound CAD, so this one, interesting. Now with pound CAD, again, conditions are not particularly great. It's a very similar market to pound USD. You can kind of block them both off and say, okay, the bigger picture, we're pretty flat here. So I'm just going to treat this as a range. We've got the midpoint, which if I whip out the fib from the high to the low, just mark it with array there just to be a little bit more accurate. Again, 50% is not, it's not like categorically a level in the market. It's just kind of the balance of the range, the midpoint, the fair value. It's not necessarily something I would look to buy from or put a stop loss below. But yeah, that's kind of the equal point of the range. So again, from a high time frame perspective, these are the areas which I want to be looking for opportunities. If I'm doing anything in here, it's got to be short term by nature. Doesn't mean there is no opportunities. It just means I wouldn't be looking for anything, spectacular here, any big trades. And again, doesn't mean you can't find them either. It's just, again, we're playing a probability game. I wouldn't want to bet the probabilities hit. But we have seen some meaningful momentum. I like the way prices are consolidated and broken out pretty aggressively. I would actually like the retest of this structure here. But again, I would keep that short and sweet. A push back to the high there, I'll probably call it a day, or at least take a good chunk of the profits and then let the rest run and see whatever happens. And I wouldn't be surprised if it comes right back to my entry. So pound CAD, I do like the buys here. I do like the buys. We've seen some short-term bullish structure, bit of consolidation. We've seen some strength from the buys there. Clearly, buys have gained some control at the moment right now. So I would be looking for buys if I was looking for the short-term opportunity. We've got clear level for a buy there. But yeah, I just wouldn't look for anything significant there for pound CAD because of where we're located on the higher time frames. I'm all about that synchronicity between the bigger picture and the smaller one as well. And for that reason, I'll keep it short term. Aussie dollar is interesting because it's actually probably the only USD pair which I think actually looks good or relatively good from a trending perspective, because all the other USD pairs pretty flat. Maybe not so much dollar yen, but again, the yen's doing most of the work there, and of course Aussie's doing most of the work here too. But yeah, Aussie has been in somewhat of a bullish trend. So, buying has been the better play than sells over the past few months here. Now, we've had a range here. I've been talking about price breaking out or rejecting the highs. And then it got quite awkward for the past 2-3 weeks because it looks like price was breaking out, then not breaking out, then breaking out, then not breaking out. So it wasn't too clear. So what I did was I just chalked this off and said, this is a kind of a secondary range on top of the range that we've had. And I said, okay, once price breaks out of this, up or down, then things become a little bit clearer. And we've kind of just got that. So I am looking at some more upside for Aussie dollar. And what I want to see is price staying above this level here. So what's this? 0.722. If we can hold above that, I like the buys. And the thing I like about trading opportunities as well, you can always logically understand that when the trend is not really performing quite well. And what I mean by that is, if price is going to be consistently breaking through support, well, the trend is not very strong anymore, is it? So buys doesn't really make sense, or at least following that trend anymore doesn't make sense. If price is going to start holding support, well, that says, okay, buyers are still pretty strong. The trend looks like it's still holding. Okay, the likelihood is probably we're going to get a continuation. So if we can see price pull back into support and hold, that's a good sign that the trend strength is still there. That allows us to find entries, that allows us to place stops in logical areas. And of course, if the trend does progress, we capitalize on that. If we do break underneath this, Does that mean the trend's over? No, just means it's not as strong as we thought it was. It could have a much bigger pullback and then turn bullish. That could be the case as well. But I probably wouldn't want to see that, to be honest. So with Aussie, like I said, we had the larger consolidation. Prices broke above that. We had a bit of a consolidation again. Prices broke above that too. So we're seeing the buyers predominantly be in control here. And I want that to continue. So I'd like to see price pull back into support, reject that, get some stops below that wherever it is reasonable. We'll have to wait for price to actually get there first. And then, looking for continuation, at the very least, back to where we came from, the high. But more importantly, I would like to expect more upside than that if this is going to turn into, or at least the trend's going to continue anyway. So Aussie dollar, I quite like the buys. Not so much from a USD perspective, because USD is still pretty flat. But Aussie's doing some work right now, so I quite like what I'm seeing there. Are you seeing gold move up? Okay, can we take a look at gold? Haven't spoke about gold yet, have I? Excuse me. Okay, we can tweetly take. So gold is bullish. Interesting with gold. So I still look at gold in terms of a large bull cycle, and I'm looking at this as a kind of our next pause before potentially the continuation. And again, I'm not looking at crystal ball. I'm just basically banking on the overall trend continuing at some point in time. When it does that, I have no idea. So in terms of the strength we're seeing right here, I would be looking at push back to resistance and pretty much no further than that. Any big continuation that could of course happen. Would I bank on that? No, not right at this moment here. We've seen some real meaningful bearish swings, which do indicate some strong selling pressure. Do I suddenly expect the trend to continue? It could do, but again, I wouldn't necessarily bet on that until I've got a bit more evidence of higher highs and higher lows continuously forming. So gold, what I do like about gold is that we have seen some real strength come in. We were trending down for the past couple of weeks and we've really shown some strength. Price is breaking above structure pretty well. We did actually break through support here prior, but we've broken straight back above that now. So I do think with gold, we're probably likely to see a bit more upside. But like I said, that's kind of the ceiling I'm looking at least for now. So I would like some pullbacks for gold. Maybe a retest of structure, it just broke. Ignore the wonky line. But something like that, continuation, flag, retest, and then presumably a push to 48.80. And then maybe that even could be a really nice, attractive place for a sell as well. So gold, I'm leaning on the bullish side of things, again, short term. When trend or direction isn't clear, I always like to take the short-term route of just looking for short-term fluctuations. And normally that means buying low, selling high. Not really buying high or selling low. That's more so when there's a clear dominant participant, a trend is strong, then you can follow that. When things are a bit flat, especially in FX, which is where I spend most of my time, you want to be quite careful there. But anyway, guys, we have run out of time. So I do appreciate A1 and the team, A1 and Nick, having me on the stream. I do really appreciate that. If you guys do like some of my analysis, want to check out my channel, feel free to go and do so. But thank you for having me on. Have a great Thursday, guys. And I'll see you all next week. Take care.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence. to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello. I hope you can hear me. So, welcome to my segment of the live stream. Let's get it started with first announcing the DNA Fund giveaway with a bit of a new format. So, for the new format, you first need to join the free A1 Discord. So, here is the form. I'm going to post the form in the comment section. Posted. So fill out the form, join the free A1 Discord, and in the channel called Giveaways in the A1 Discord, you will find the form for the giveaway. Okay, and then you'll be able to access the giveaway. It's gonna be a DNA funded 5K one phase account. Yeah, 5K one phase account. I'll post the link one more time in like 10 to 15 minutes. As far as the markets, I have a Bitcoin trade right here that is running some okay percentage. So we pulled back a little bit. It was running, I think, 1 point something percent at one moment. Now it's pulling back. Again, we're kind of moving in this channel-like formation. Why can't I draw channels? Come on, Fib channel. So I'm trying to click channel, but it won't let me draw it. Anyway, having some technical difficulties. Let's do the line. So this would be the bottom, and this would be kind of the top of the channel. So we have kind of hit the top of the channel and now retrace. So I would say it's just part of the movement. We have the we have the 20 MA providing support, and I'm trailing the stop loss. My first take profit, or my only take profit for now, is going to be 94, 95, something like that. And along the way, the game plan is, of course, to move the stop loss, to trail the stop loss below the swing low. So I have it trailed at 74451, not looking to move it until until a new low is established. So Discord link is in the form. So click on the jot form that I posted in the comments, and you will get access to the free Discord. You first need to fill out the form. Okay. That's the positions. That's the position I have running. I have the Nikkei here. So Nikkei, I'm looking for pullbacks to 20 MA. Then of course I would look to get in. Nikkei, absolute beast, exploding higher. Really loving this risk on environment. So looks great. Looks great. I just need a pullback. Maybe not even to the 20 MA. Maybe if we pull back to, let's say, this level of support, that could be fine. That could be okay. And then we have the Nasdaq. So Nasdaq, again, also looking for pullbacks. We're not getting any, so we're just getting a straight shot to the upside. Yeah, I would like to see this thing pull back, give me an opportunity. We talked about chasing moves or getting in on smaller pullbacks in the Discord. So if you go to, let's say, the 15-minute, you will find for sure some pullbacks to get in, like this one, this one, this one, and a lot of them actually. What about the 1 hour? 1 hour, yeah, pullbacks as well. But for me personally, I have to get a bigger pullback. So as Max talked about in the Discord, it's very subjective. It's all about what your approach is, what your strategy is. Are you a swing trader? Are you a scalper? Are you a day trader? Are you looking at the daily chart, the 1 hour chart, the 15-minute chart? It heavily depends. So you need to pick what you like. You need to pick your specialty and then stick to the plan. My game plan is I have to look for a pullback. Nick has the same opinion. The reason why we both use the similar approach, and I think Alan would agree, is looking for pullbacks is much more simple and at the end of the day, much easier. Hunting the price on the 15-minute, hunting for pullbacks on the 15-minute can be pretty tough, pretty exhausting, especially if you are doing social media, if you're doing live streams, if you're doing a trading community. So if you're a full-on trader, I mean, if you're like a scalper on the 15-minute, if you're working at SMB Capital or Positive Equity, real prop firms, or at a hedge fund, then yeah, sure, you can scalp the 15-minute. But if you have other things going on, it's kind of tough. And again, depends on your personality as well. Personally, I like the daily chart. I like higher time frames more than the lower ones. I think my edge is greater on the daily rather than on the 15-minute. I think the 15-minute has a lot of noise, while the daily deletes much of the noise and gives you a clear direction. So that's a little bit about chasing moves, not getting into these uptrends, missing out on percentage. Market conditions change, and this is a perfect market condition right here. So you don't often get a repeat of what you're seeing here. It's much more often that you get a correction to either the 20 MA or an even bigger one than just a straight shot to the upside. I think the last time this sort of price action happened, Nick talked about it. I think it was in 2020, something like that. So those are the 3 things on the watch list. Comments. Let's see. Comments. Ball out. Hello. Did you make that 920 million crude short? So oil is actually pulling back even more. I looked at financial juice. I can't see much. To give me clarity why oil is sort of moving lower. We did get US and Iran closing in on a 1-page memo, but we got posts similar to this one for like 3 weeks. We've been getting 3 weeks of posts that are telling us the war is over, the US has won, we have a deal, we have an agreement, and then as it turns out, there's no agreement yet. So it looks like the market has just started to sort of ignore the Middle East. One interesting indicator that basically coincides with the exact top in oil would be the Economist. So the Economist right here. See, this article or this magazine cover was posted exactly at the top. I think on the 4th of May or on the 5th of May. And that's sort of the perfect contrarian indicator. Whereas if something is well known, if everyone knows it's good to buy oil and oil is going up, well, pretty much everyone that has a lot of funding, a lot of capital has already bought. So there's no buyers left. There's only sellers. That's why you get the magazine cover, and that's why you get a full-on reversal. And that is why this is a great contrarian indicator. If you want to read more about it, you can put in The Economist contrarian indicator, and this is it. Read this. So from Spectra Markets, the magazine cover indicator. If you want to know more about it, it has a very, very high win rate. I mean, they've been talking about oil for like decades. They have like drowning in oil, and then oil basically does the opposite thing that they're suggesting in the magazine cover. Essentially, for this one, it would be that here it would signal an oversupply, but then actually the supply would tighten right after they post this, or kind of the top in the narrative would be reached. Okay, let me just click OK on the reminder. I have the reminder about the new giveaway style. So let's post the link to the Discord one more time. Again, if you want to participate in the DNA funded giveaway, there is a form, jot form in the comment section, and you first need to join the free A1 Discord. In the Discord, find the channel that is called giveaways. In that channel, you will find another form that if you fill out, you'll get entered into the giveaway. So let me see, has there already been some entries? For sure there have been. Today is the 7th of May. 7th of May. Let's see. Yep. Okay, we have quite a lot of entries already. So nice. Good to see that. Also, I want to remind you, if you want to get funded with DNA, this is my personal 2-phase funded account, 25K. I'm down $300 I have 3 trades running, all of them fortunately in the green. So we're going to see what happens with that. The goal is, of course, to get a payout. But I've had a great experience so far. There's a big broker behind this company. And the best part about it, with the code, no notifications, thank you very much. With the code A1 Live, you can get 25% off any DNA funded challenge. Okay? So the code A1 Live, 25% off. Sluggy, hello. Simo, what's up? BTC, yeah, we did BTC at the start. Max, welcome to the stream. Thoughts on GBPUSD? I'm currently a buyer. Let's see GBPUSD. So personally, I don't like it at all for multiple reasons. First, I think the EdgeFinder is going to be flat. So let's first get that out of the way. GBPUSD. Neutral score, which means that's a no-go for me at the start. Then the pound is getting pretty weak data. The UK as a country is doing pretty badly. The unemployment rate is problematic. Check this out. If we go to economic data, we go to labor, we go to unemployment. We put in the UK. Okay, so it's definitely elevated. Sorry, is it? Did I miss something? I think if we go back 2 years, it should be an uptrend. Yeah, so from 4.2 to 5.2, and now, okay, now it's pulling back a bit, but it's still elevated. It's still on the uptrend. Next, the dollar. I'm starting to become a little bit bullish on the US dollar. The reason for that is not the Middle East conflict, because I know the dollar is losing value as the Middle East conflict gets resolved. But I do believe we get a strong NFP. I believe that the unemployment rate prints 4.2%. So I did some reading, I did some research, some analysis using Claude AI, looking at jobless claims, looking at continuing claims in the US, and they're all on a downtrend. Unemployment rate usually follows jobless and continuous claims. So essentially, it's a lead lag indicator. The jobless claims are the leader, unemployment rate is the lagger. I think we print 4.2. I think that could give the dollar some juice to gain value. Of course, I know it's the Middle East, and I know it may not have a huge impact, but it still doesn't change my opinion that the USD is waking up, that the dollar is gaining economic strength. That's why I don't want to go long on GU. And the final reason, if you look at this chart, it just looks pretty flat. Looks range bound, in my personal opinion, on the daily. So I think we're right in the middle of this range. So I don't want to do anything. Okay. NFP set for tomorrow, yes. You're wrong, Marco. GP is having good data. Let me double check. But the EdgeFinder is not giving me a bullish reading. Economic heat maps, UK. Okay, well, the economic heat map is 100% true, but the top setups page is neutral. So if we put in GBP USD, neutral score. I can't do much. I need a bullish print here. If I just want to look at buying GU, I need a bullish print. Just the way I trade, just my trading style. Why can't I register to the draw thing? As it says, only can register once. You can register with 1 email per month. So the form resets once per month, which means you can use a different email. That's an option. Or you can wait for June. Yeah, waiting for June. Euro dollar. Euro dollar. We can take a look at euro dollar. Yes, let's take a look. Euro USD. Neutral as well. I think it's flat. When it comes to the chart, it's a bit of a better story than GU, yes. But do I have a lot of conviction Do I have a big edge in buying euro dollar? In my opinion, no. So same thing as on GU, except the euro is a little bit stronger long term compared to the UK. Short term, I know the UK is printing some pretty good data, but I'm not focusing on that at the moment. I need the cumulative score. I need the top setup score to print bullish. Okay. Agreed on GDP. Underlying economy is poor and fiscal policy issues. Yeah, they're not sure. Should they cut interest rates? Should they hike interest rates? The central bankers, they don't know what to do. The UK, in my opinion, is in big trouble. So let's see. Bank of England. 30% chance of a hike. They are on a path of hiking rates. Will they hike? Not sure. I don't think they committed to anything yet. So I think this is just the market pricing. They're following the Middle East. They are thinking inflation is coming, but it could lead to lower growth in the future as people travel less, as people spend less, as people consume less. It could hurt the growth. So let's go back to the EdgeFinder. Let's go back to the economic data. Let's see the GDP for the UK. It's really low. This is also one of the main issues. For 4 straight prints, you're getting 0.1%. Does that look like a healthy economy long term? In my opinion, it does not. Compare that to the US. Compare that to Australia. Australia really doing really well. Compare that to NZD. Okay, NZD not the greatest example. I think euro is pretty bad as well when it comes to the GDP. But at least it's above 0.1. So it came out at 0.3 in the last couple of prints. UK, I don't think is a good buy. Gold. Yeah, let's take a look at gold. So gold, pushing higher, which is good for my position here. By the way, this challenge is purely traded by ChatGPT. So I'm not doing anything here. I'm just taking signals from ChatGPT, and it has a buy on gold against the euro. You may ask why gold against the euro? Because on DNA, you can have exposure to one currency pair at a time. So I'm exposed to the dollar through the SPX 500. And I have, okay, I need to take care of this. I have a Euro GBP sell and a gold against the euro buy. That's both connected with the euro. Okay, I'm going to look into that. Anyway, doing well, still looking fine. Gold against the US dollar. It's recovering. Is it my favorite thing right now? No. Would I be looking for setups? Personally, no. I would say if I had to list all of the asset classes, I would say equities right now are the best. Nikkei, Nasdaq. Crypto is second, so Bitcoin is the second thing. Third place would go to Forex. Okay, Forex. Fourth place would go to the metals market because I don't think my edge is pretty big. I know copper is doing pretty good. Silver is doing nice as well. And the fifth place, I would put oil. Oil, I think my edge is 0. I think oil is impacted exclusively by geopolitics, especially Brent, exclusively by what Trump thinks, what Iran thinks, and we all know it's impossible to predict what the hell Trump is thinking and what his next tweet will be. And also, there's a lot of fake news out there. As we got, okay, this is pretty hawkish. What do we get? Fed's hammock, Fed signal on next move being a cut is misleading. Hawkish. So we got US and Iran closing in on a one-page memo. Where's the evidence? Who is sending out this news? I mean, I know it's Axios, but it's just been extremely tough to predict. So I'm staying away from oil completely. And gold, I know it's recovering, but until I can get a bullish reading on the EdgeFinder, I will remain patient. So right now it's neutral, if I'm not mistaken. Let's take a look. Neutral with a score of 1. So completely neutral. AJ, do you think there will be an intervention again this month? We can talk about the intervention for sure. Fed's hammock, Fed signal on next move being a cut is misleading. Yeah, I just saw that. So thank you for putting it in. NZD is still mixed. Okay. UK also has issues with fiscal policy and some other. Marco, it's fine as you're short euro in both. Okay. So that's the trick. Nice. So, Daronto, hello. You can call me Marco with a C. I don't mind. Has he done Aussie Swiss with the current geopolitical event? We're going to take a look at Aussie Swiss as well. I do want to talk about the giveaway because I want to announce the winner. So let me grab all of the entries. Let me grab all of the names. Let me refresh first, just to be sure that we captured the recent entries. Let's see. Today is the 7th of May. So let us take a look at the 7th of May. We have the names. Copy. Put them in the wheel. Paste in. So it's going to be a 5K one-phase account. And the winner is going to be Ahmed S. Congrats on being the winner. I have your contact information. And after my segment ends, I will send you the code for a free 5K one-phase account. All right. So getting back to it. We had Aussie yen and we had Aussie Swiss. I want to talk about the intervention, and I'm going to focus on UJ. Intervention, we had 4 of them so far. In my opinion, it's not confirmed. Yes, I think in like a couple of weeks, the MOF or the BOJ, they will come out with a full report. But I think this was the first one, second one, third one. I don't think this one was an intervention. And I think this is the 4th one. Very interesting. We cannot seem to go below this level of support. I don't know why. I don't know why we cannot get any conviction. What I do know, I don't want to sell at the moment. So we're at the bottom of the range, right? We're sitting right at the support level, right at the bottom of the range. Selling here wouldn't be the smartest thing. Maybe selling at the top. Maybe that would be a better option. If we look at the last time when the intervention happened, so if we go to 2024, we go to, let's say, click replay, go to here, go to the 1 hour. We kind of had a similar thing, wouldn't you agree? We had the initial drop, a couple of smaller drops, but we consolidated before convincingly dropping lower. So I'm not saying this is not going to continue. It might as well continue. I'm just saying the entry here is not that great at the bottom of this range. So I'm not looking to get in. Maybe if we go back to these highs, I'll consider it. And yeah, I missed the initial move. Unfortunately, missed selling at 160 would have been a pretty good trade. We had Aussie yen as a request. Aussie yen. Aussie yen on an uptrend, looking pretty well. Although, would I be buying at the moment? I like the Aussie. I think Aussie overall is a strong currency. And let me check the top setups. Aussie yen. Neutral, that's your first issue. I tell everyone, if you want to filter down your trades, EdgeFinder is the best thing to use. Like, one of the problems that retail traders have, it's not the only problem. They have a lot of problems. I know because I used to have all of those problems. I still have some issues, but that's a different story. One of the main issues for retail traders is they cannot filter. They usually overtrade. They take too many setups. And then they go into drawdown. They trade when the market conditions are not good. Great example was in April. If you took a lot of setups in April, you probably lost money. Unless you're Max. Max probably made a lot. But if you're a kind of a regular retail trader, you probably made some percentage in March, and you probably lost it all in April. In April, what I was doing, I was patient. Nick, patient. Alan was patient. Iwan was patient. Best way to be patient is don't take a trade unless you can see a bullish or bearish reading on the top setups page. Simple as that. Go with the EdgeFinder and your drawdown will become a lot smaller. You'll be able to be patient during the quiet months, during the range bound months. So Aussie yen, we talked about AJ. I mentioned I do like the Aussie as a currency, but I don't like buying it because of a possible intervention looming. If this continues, you're going to get yen strength across the map and AJ will sell off in sympathy, okay? UDJPY. So AJ will sell off in sympathy. Not a great story there. I think if you kind of wait it out a bit, if you see if there's an actual continuation of the intervention or not, then you can look to do something with the yen. Personally, I would stay away from the yen. What could be a bit better is what I also saw in the chat, and that would be Aussie Swiss. Aussie Swiss is better because the SMB, the Swiss central bank, wants to see a weaker Swiss franc. That's a great story, much better than the BOJ wanting to see a stronger yen. But your issue is still that Aussie Swiss is probably going to be neutral. Oh, actually very bullish. See, this is a good position. Aussie is a good currency, long-term strong currency. The RBA is looking to be hawkish, hike rates in the future. Swiss franc, the SMB wants to see a weaker Swiss franc. Top setups, very bullish score. We are sitting right at near the 20 MA. I think this is a pretty good bet. I'll think about getting in on a buy position here. So good pick. I prefer this much more than Aussie Swiss. I think this is a pretty good setup. So thank you for putting it out there. I have a question. Do you ever take a trade without the EdgeFinder confirmation when the technical analysis is golden? Never. So yes, I do take trades that are not in line with the EdgeFinder, but those trades usually have a very, very strong fundamental reason to move. It's rare. Yes, I'll execute those positions, but I need a very strong fundamental reason. Okay. Now, purely technical analysis, I used to trade that way. Didn't work out quite well in the end. It worked for a couple of months, for a year or two. Then I went into a pretty significant drawdown and drought of no trades. So I don't want to go back to that. I don't want to focus on just the technicals. I always want to mix it up, put something else in there. Is it going to be economic data? Is it going to be the macro situation? Is it going to be the EdgeFinder? Is it going to be seasonality, sentiment? I don't know, but I will never take a trade just because the chart looks great. That's my take on it. And I think if you have that approach, you will be able to control your drawdowns, and your overall percentage, overall psychology as well will improve drastically. That's also one of the big issues of retail traders. They come into the game, they learn technical analysis, they do only technical analysis, and they could make money for a couple of months, but sooner or later they go back to break even or into a massive drawdown. So purely technicals never works. You see people trading ICT, you see them being successful for a couple of months, but do they have a track record? No. The ICT guy, the inventor of the strategy, does he have a track record? No. Every single competition he enrolled in, he failed. So that's just proof right there that it doesn't work. Where is your mustache? I don't have a mustache. That's Nick. Marco, I made a lot in April, but losing a lot in May right now. It's part of the game, part of the market conditions. Just control the risk and you'll be golden. Euro Aussie. Okay, I'm out of time, but I want to mention the code A1 Live gets you 25% off. Okay, 25% off any DNA funded challenge. Just to remind you, this is my account right here, trying to get a payout. We'll see what happens. You can catch me next week. So tomorrow I won't be streaming, but next week you can catch me. I'll be doing one giveaway per stream. I wish you a great weekend. I wish you a successful NFP tomorrow. I think it's going to print strong. I think the unemployment rate prints 4.2 instead of 4.3. Position accordingly. But yeah, that's about it. Thank you for watching and see you in the next one. Also, don't go anywhere because James is coming on right after me. Goodbye.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Just realized I was muted. Hello. How's everyone doing? Happy Thursday, almost the end of the week. I see Sluggy in the chat as always. Good to see you, Sluggy. And Max, hope everyone's well. Okay, so positions wise, nothing's changed since we spoke yesterday. I'm still in the Aussie Swiss position. Very sort of slow burner, really not much to discuss on this one. I suppose the upside is, first of all, obviously it's in profit, which is great. Secondly, it's a positive swap trade. So even if it does end up being very slow and it's just, very choppy, even slowly to the upside, it's fine because we're getting paid for the whole duration of the trade. As long as it doesn't come back down and stop me at break even, fine, whatever. Oops, didn't mean to do that. I went shopping this morning and bought some stocks. I'm not going to go into that. I don't feel qualified enough to talk about stocks here. I don't want to give anyone the wrong impression, but I am still in SSLN. We've been discussing this one for a little while. Essentially just physical silver. People outside of the UK might know it as SLV. It's just priced in pounds. So I've been accumulating this during the drop. Unfortunately, I've got a pretty bad average price at about 5.5. So not the best, but doesn't really matter. It's an investment style position. So looking really for silver to get towards 100, 150 over the next, whether it takes a year, 2 years, doesn't really matter. Just happy to hold on to that one. But yeah, that's it. A couple of stocks, silver and the Aussie Swiss trade. But yeah, that's it. Sluggy, I saw your thing. I think it was Marco that put it in the A1 Discord about the interventions at the 45-minute mark. I thought it was quite interesting. I mean, I'll be honest, it doesn't do much for me, but I thought it was quite cool. It was a good find. Hey, James, weird question. Does the EdgeFinder A1 fundamental analysis model account for external factors that may influence price action, such as geopolitical events and cross-market correlations? No. So when you're looking at the EdgeFinder, and we've got situations that have external factors that aren't fundamental data releases. So let's just take, COVID, Russia, Ukraine, Middle Eastern situation, whatever it may be, things that aren't hard data points like the EdgeFinder reads. You can obviously still use the EdgeFinder as a fantastic reference point, but to do that, you would have to have an understanding of what the fundamentals actually mean. So, for example, if we take the recent situation with the Strait of Hormuz and we say oil, obviously the supply chain was essentially broken temporarily. Aussie, New Zealand, I'll get onto that in a second. Temporarily, we saw yields up, inflation expectations going up. Okay, how does that relate back to the hard data? Which central banks have been very dovish or cutting? Does the higher inflation prints then likely going to pivot them to hold or maybe even go hawkish? And then you can go back to the EdgeFinder and say, okay, this is what the current data is. This is what the markets are expecting. And you start building it from that point. But again, it requires you to already have a bit of an understanding. But I know that was a bit of a tangent. To answer your question, no, it doesn't have that functionality. As far as I'm aware, could be wrong. So Aussie, New Zealand, yeah, completely forgot to bring that one up. So yeah, finally out of this trade. So I got stopped. Actually, typically seems to be reversing right where my trailed stop would be. Now, unfortunately, it's a little bit painful because I didn't get nearly what I wanted to out of this trade. So it was fantastic, but it's not as great as it looks. Like on here, it looks like, three good positions, but in reality, We've got one trade here that was stopped out for me, it was around 1.25% profit. This one stopped out for not that much. It was 0.43. And obviously this one's break even. So we could roughly say around 2%. So it was a good trade, of course, but it wasn't really what I was expecting. I kind of thought we would continue higher and it would be a beautiful one. But anyway, swaps were great. The trade was fine. It was smooth. It was easy. It is what it is. But yeah, I'm finally out of this trade now. I wouldn't be opposed to getting back in if there was another reason to. As I've been saying over the past couple of weeks, I am just very, very cautious. So Aussie New Zealand is extremely extended. It's very, very crowded. Sorry, the Australian dollar is very, very crowded. And there is now a couple of talks on the street about the RBNZ turning a little bit more hawkish. So there is actually ideas of potentially a mean reversion trade. Now, I'm not going to go into that too much today. I don't have the research to really back it up to go into that in too much detail. And I don't think that that's quite ready yet. But I think if we go on to let's do this together. Let's see. Yeah. So if we apply a 200 Bollinger Band, it doesn't really matter if you use Bollinger Bands or not. This is more just a way to say, is the market technically overbought, oversold, or extended, whatever type of phrasing you want to use. So typically FX markets revert, as we all know, especially things like Euro, Pound, and Aussie New Zealand. They're very correlated. So as you can see, I mean, obviously that's a range. This doesn't quite work, but no matter, well, within reason, no matter what major FX market you look at, if you apply 200 Bollinger Band to the weekly or the daily or even a monthly, you will see when we break above, it's very, very common that we have these mean reversions. We are currently in a very extended situation here, which leads me to think we are going to have this type of sharp retracement at some point. You know, as I said, I don't know when that's going to be. Likely, we would need to see the RBA cool off on the hiking cycle, and we would need to see the RBNZ turn more hawkish to basically eradicate the differential that we've got on Aussie New Zealand right now. So that's my view at the moment. Again, I just want to clarify, I'm not going short. I don't think that's warranted right now, but I think in the near future, there's definitely ideas there. On the fourth one, they changed times. I didn't notice, to be honest, but yeah. Bashi, hello. Good to see you as well. What do you think can Euro AUD go to? Let's see. Let's go to the monthly first. It's tricky. I would say towards this level down here. And the reason I would say that, so that would be, let's just say 1.6 to keep it easy with round numbers within this sort of zone. So of course, we'll scale down time frames to have another look, but on the monthly, we've got really nice previous lows, which would very likely act as a strong support level coming into our monthly 200 moving average here. Weekly time frame technically is still bullish, just using the moving averages here. RSI is becoming a little bit oversold again as well. Maybe we could look to double bottom here. Daily time frame, if we end up breaking these lows on the monthly time frame and we break below the 200 monthly moving average, which we just looked at, it wouldn't surprise me if we end up back into, oops, that was the wrong line, back into these lows down here. That would be a serious sort of move to the downside. That would be kind of my longest take profit, or my furthest take profit, which would be basically 1.44. So that's my view. But yeah, I'm going to be honest, I don't really want to get into the Australian dollar at this point. I'm in the same trade on Aussie Swiss, holding in buy position, but getting negative swap fee from my broker. The carry doesn't work. What do you think? You've got a bad broker, Jam. So if we go to the EdgeFinder, let me just get this back. Macroeconomic carry trade here. Aussie Swiss, you should be getting paid really nicely. It's the #1 carry trade. I mean, obviously we've got 0% interest rates with the SMB. RBA has 4.35, and obviously the directions buy. If your broker isn't paying you swaps, get away from that broker. It's very common with prop firms as well. Brokers, it surprises me actually, because most brokers will honor swaps. However, there are some that obviously don't, and prop firms specifically are notorious for just taking swaps, even if you should be getting paid swaps, because it's just one of those small things that most average failing retail traders don't check and don't care about because they think it's irrelevant. But when you're taking multiple trades, it adds up, and it can mean quite a lot over a long period of time. So I would heavily reconsider the broker you're with. I know A1 Trading actually is affiliated with some brokers, so feel free to check their site. Every day I'm shocked by the Nasdaq. Yeah, I made a video today, basically talking about the current situation in the markets, and something that crossed my mind was it's feeling a little bit like a buy the rumor, sell the news type of situation. So as we've been speaking about, these markets have been rallying since before we really had any positive developments in the Middle East. At this point, it still seemed quite bleak. There wasn't really anything happening in terms of positivity, but the markets were just front running risk on. So buying the rumor, if we get a complete de-escalation, is it going to be a sell the news event where we end up having actually a larger correction? Whether it's just back, whether it's just back to these previous highs or back towards a 200 daily moving average, I don't know. Obviously, I don't know if that is going to be the case, but it just feels like that a little bit at the moment, Looks like the market didn't price at all a risk of carry unwind. But if we break again the yen, it could be bloody. Yeah, I don't think that's going to be the case. It's tricky. I personally don't want to buy, but if I was going to, no, it doesn't make sense. I don't want to buy it because I don't like the yen, but I don't think this is a bad buying area if you are confident in dollar yen. So we've had interventions. We all know that they're not a long-lasting solution. They are a short-term fix to a longer-term problem. They're very aggressive, very quick, but they get bought back up very quickly as well historically. So I view this more of an opportunity to actually buy dollar yen at a nice discount, ride it back up, get the carry trade in, and then look to potentially take profits back at the previous all-time high. That's my view on it right now, but of course, could be wrong. Hey James, what do you think of Euro New Zealand shorts with NZD getting stronger and gaining momentum? I actually, on the surface, I don't mind that idea. Let's see. Yeah, I do quite like it, but I think I'd need to see a little bit of a better price. So we've got a really nice level here on the weekly. If we go down to the daily, what's there? Yeah, so I think if I wanted to be a buyer, or if I was going to be a buyer, I'd have to see price come a little bit lower into these previous lows and see a rejection off this level. And it would be a very simple buy the support type trade. My normal approach with the fib pullback doesn't work in this situation because price is currently too low. Technically, we are still in a bullish trend with the moving averages, but technically speaking, it looks a little bit ugly in my opinion. Oh wait, sorry, were you saying shorts? Oh, my bad. Sorry, I don't know why, but I thought you were talking about longs. Short wise is going to be a little bit more difficult because we are in these higher time frame trends. The weekly, monthly is actually just flipped bullish here. Daily, as I said, is still in a bullish trend. So if you were going to be short, I think you'd be looking more at a sort of mean reversion style. You'd be wanting to see a correction of this left side. So in that case, you'd want to see the opposite of what I just said. So break below, retest, and then continuation lower, which actually I think technically would be a lot better. So whether it be something like this, clear out these lows here. Ideally, we get the fib zone within this level, and then we see a retracement, which obviously be the retest of these lows, pull back into the fib, and then a rejection and continuation lower. I think that's the way I would go about that. How do you prepare for geopolitical shocks that gap price, like April 12th and 13th, Iran talks collapse. Straight for moose, you can't prepare for stuff like the reason the market gaps is because it was unexpected. So you cannot prepare for it. The best we can do as traders is reduce our risk and make sure that we're not oversizing on our normal trades. So for example, this tomorrow markets are obviously going to close, and we could get some type of news. It could be anything. It could, positive or negative. Very easily, oil can gap to the upside or downside. I don't know if that's going to happen. If it does, I don't know which way it's going to go. There's nothing I can do really to prepare for it other than make sure that my sizing isn't ridiculous. My stop losses are well placed or reasonably placed, and that's all you can do. If you could prepare for things like that, the markets wouldn't be gapping because everyone would prepare and the markets wouldn't need to gap. Does that make sense? No face to the upside, by the way. I closed out to $1 Swiss at break even. Fair enough, Sluggy. Swiss yen. Swiss yen, let's see. It's kind of the same as what we were talking about with dollar yen. I think it's more of an opportunity to just be a buyer. The downside really is just the swaps on this trade. So obviously the S&P has 0% interest rates. Yen now has 0.75. So it's a case really that you'll be benefited more, or you'd be paid more to hold something like dollar yen, Aussie yen, things like that. Well, obviously where the rate advantage is in your favor. So that's kind of just my quick 2 cents there. Quitera, good to see you. Hope you're well. So let's have a little look-see. Let's go back to our... Actually, let's just go macro only. I keep forgetting to put that one on. So Aussie New Zealand is still bullish, and institution-wise, they are still bullish as well. However, it does seem like caution is building up, as I've been talking about. So I wouldn't mind buying back into this market at some point. The tricky thing really is just where to get in, because right now there is nothing for me to do here. I'm still quite confident that we are going to see roughly within my target level get hit, which would be 1.25. So it'd be unfortunate to miss that because I've been positioned quite well. In hindsight, maybe my stop loss should have been lower than the 200 moving average, but it is what it is, protecting downside on a decent trade. So we'll see. But yeah, I think there's still potential. Aussie Swiss is also bullish with a score of 7, which is nice. As I said, I'm already in Aussie Swiss. I don't think I would scale into this one just yet. I would really need to see price make a decisive move higher. 200 moving average obviously makes a move higher as well. Then on a pullback, we could look to scale in at that point and let this market continue. As for right now, it's just a little bit too choppy. It's too near the first entry to warrant a scale in position. Yen is getting a bullish reading. I've got no interest in buying the yen though. Aussie CAD, Aussie US dollar. Aussie US dollar seems okay. And the reason is because we're seeing yields lower. The Australian dollar still has a relatively nice stance advantage or divergence, if you will, against the Fed. So I think, I don't know, it's tricky because the price action is really ugly here. So I think best case scenario is we get to pull back into the fib, which would kind of retest these previous highs. It wouldn't be perfect, and then get that continuation higher from that point. Keep it simple. I think Swiss yen is due a bigger drop, and you're already in. You might add. Very nice. What's the reason? Yeah, what's the reason you think it's going to have a bigger drop? Euro pound. Yes, my arch nemesis right now. Excuse me. Yeah, I hate this market. So, I'm just thinking here. So I like the idea of being short. I wouldn't be looking to be a buyer, to be honest. I think looking to be a short seller of Euro pound is kind of the go-to at the moment. The trend is there, the fundamentals are there. It makes sense. The problem is just the technicals are really difficult. So we've been talking about this over the past week or so, but the euro pound price action just isn't very friendly for the way I trade. So very often, we get the chop, then we get the decisive move, then we get chop, then we get another move, then it's chop and another move. In theory, it sounds fine, just get in while it's chopping and wait for that move to the downside. But for the way I trade, like up here, I missed my entry by just a few pips because it was just range bound. We didn't get a full retracement. Then I missed the move. So I think, I don't know, actually, let's just see. Yeah, here. So I wouldn't mind getting in if we could come into this fib zone properly, retest these previous lows to the left, something like this. I think that would be fine because, again, we're in line with the trend. The fib is there. We've got previous structure to the left. The fundamentals are fine. It looks good overall. So that's kind of what I've got there. Good day, sir. Hope you're well. Do you have mentorship program? I do, actually. Quatera is in my mentorship. So if you want a third-party review, I'm sure I'm sure they'll drop a message. But yeah, no, I do have a mentorship. We don't do day trading specifically. I teach scalping, and I teach macroeconomics. I teach swing trading, and that type of thing. Quatera, I appreciate that. Thank you very much. But yeah, no, if you want the lighter version, I do have a free course. You can scan the QR code on the screen. It's completely free. I teach you how to use the EdgeFinder, or how I use the EdgeFinder to find trades. And you get a full 30-minute video and a PDF to go along with it. So I'll be honest, if you don't have the funds for mentorship, I don't do it for free. I do charge in the 4-figure range. So if you don't have that type of money, the free course is the way to go. Sluggy's in euro pound. Very nice, Sluggy. I'm a little bit annoyed at you for that because I have missed it. But no, good stuff. So yeah, I think this would be the best case. Oh, sorry, this would be the base case for me. Is just a very, very simple pull back to fib, let the trade run. Beyond that, I don't think there's really too much else. What I'm going to do actually is just set an alert here so I don't miss it again, because that would really annoy me. What else do we have? Dollar Swiss is getting a bullish reading. I don't really have any interest in buying Dollar Swiss at this time. CAD yen, so all of the yen pairs are still getting bearish readings, which is interesting. We've got New Zealand yen, pound yen, Swiss yen, CAD yen. Oh, and euro yen as well. So what I've been saying over the past 2 weeks or so was, in a weird way, I'm using the EdgeFinder more as a timing tool, which normally wouldn't be, that's not its use case, but that's how I'm thinking about it right now. So the way that works really is because specifically on the yen, first of all, I don't like it. But secondly, I'm still massively in favor of buying yen pairs and just holding for the swaps and letting the carry trade do its job. So whilst those markets are getting these bearish readings, it's more a case of letting those bearish cases play out. Then when they flip back to neutral or bullish, then okay, we could potentially buy whilst it's on maybe a discount or at least into a bit of a drop. You'll catch it, James. I appreciate it, Sluggy. We manifest. That's how the markets work. We've just got to believe it and it will happen. That's been my biggest wake-up call. What has been your biggest wake-up call? Oh, R&R doesn't matter, seeing green does. Yeah, I mean, to an extent. I mean, you can't close a trade for $1 profit if you're risking $100 a trade. But I get what you're saying, and I agree somewhat. Let me just double check who's on after me so I can throw over in a couple of minutes. Cool. So it's Tiger on after me. Good stuff. Okay. So let's just do a review. Update on the gold trade. I was short gold yesterday. I think I showed that on the stream. I just couldn't do it. I couldn't stomach it, so I had to get out. When I say couldn't stomach it, that sounds really bad. I don't mean it was a massive loss. I mean I just wasn't comfortable enough to keep it going. So I was short gold, basically, as I'm always explaining, fib from the high to the low, pull back into some kind of previous structure. It's not super clean. We've got previous lows over here, came into the H4 200 moving average. We had the RSI oversold, and the EdgeFinder was giving gold a -4 score. So it seemed okay, and we had this sort of pin bar H4 close. So I was like, okay, no problem. Went short, had to close it for, it was a 0.2% loss. So it wasn't anything really interesting, but it was just a little ago didn't work out. So I wouldn't mind being a buyer of gold at this point. And the reason is because we're seeing yields coming back down. We're seeing dollar weakness. We're getting positive developments out of the Middle East. So I think if we can buy a dip, it's reasonable. So fib, again, from low to high this time, because I'm looking to be a buyer. If we could pull back into these previous highs, which lines up with the 50% retracement level, I think this is a really nice buying opportunity for gold. And then we could maybe look to take gold back up into its previous high. I'm not saying that's going to happen 100% or anytime soon, but that would be sort of the idea or the longer term idea behind that trade. Manifesting a 10-hour trade. I appreciate that, Sluggy. Thank you very much. So you're annoyed because funded accounts aren't real money. Yeah, I mean, obviously. Do you think someone's going to give you $200,000 in just trading capital to trade with? Absolutely not. That would bankrupt a company within a month, if that, maybe even a week. Do you know how many people pass prop firms by just full porting and then continue to full port to get max payouts and blow the account? It's a terrible idea. Yeah, I'm fairly sure all prop firms are very transparent about that as well. So the thing is, it's not even a bad thing. Like, I'm not really a massive prop firm guy. I'm not in massive favor of them, but I don't see a problem with them giving you fake money. It's like, if you make money, fine. They pay you normally, obviously, if they're a reputable firm. But then if you lose money, it's fine. What do you lose, like $500 of your money? It's like, there's really not much downside other than what you pay for the account. So whether they give you real money, whether they give you fake money, whether they give you monopoly money, it doesn't matter. As long as you make money and they pay you, it's fine. It doesn't matter what you're trading with. So you definitely see a retracement in gold. Well, I mean, it's hard to say definitely because obviously the markets can do anything. But yeah, in theory, I mean, we've now broken above the 200 moving average on the H4. The RSI is overextended. So yeah, I would say naturally some sort of correction at some point is due. Whether that's in the next 10 minutes, the next hour, the next day, I don't know. But yeah, I would say on the next pullback, I think being a buyer is a reasonable idea. I think that's probably what I'm going to try to do. Yen being crypto again. I've got 2 minutes left. Let's just take a quick look at Bitcoin because we have been paying attention to Bitcoin. But just to clarify, as I always say, I'm not a crypto trader, so don't take everything I say on this market to literally. Do your own due diligence, as you always should anyway. So weekly time frame, we've already discussed the level it's bounced from. Very clean, very simple. I'm just a little bit cautious. And I said the same thing about this level and nothing happened. So again, don't take it too seriously, but this is just my technical view. We're coming into the weekly 50 moving average and we're coming into weekly previous lows. The RSI may be coming a little bit extended as well. So in my opinion, we've kind of got two outcomes from this point. We hit this level. We have then a correction back to the downside. We continue towards 50, 40K. I don't really care if that happens. I don't know if it will happen. Or we come into this level, reject, and then we have a minor pullback, 50% retracement maybe, and then continue higher. I would suspect this is the most likely case where we end up having a little bit of a rejection here. Might see some people taking profit, and then it's an opportunity for more speculators to then buy at a bit of a cheaper price. So that's my view. But again, I'm not a crypto guy, so do as you please. 1 minute on JPY is wild. What's going on in the 1 minute? Let's have a look. Oh, it is. Yeah, crazy. Guys, dollar yen's crashing. dollar yen's crashed. It's the end of days. Thank you, sir. Appreciate it. I appreciate you too, Simon. Thank you for watching and supporting the stream. It means a lot to me and the A1 guys, I'm sure. Send help. Sorry about that. I'll call the MOF or the BOJ and see what I can do. I'll tell them. My friend Bashi told you to cut it out. Full porting calls on the next pullback. As you should. That's king behavior. Of course, I'm joking. Please don't do that. But yeah, anyway, that kind of wraps up my segment for today. I don't really have anything else to discuss with you. As I said, long on Aussie Swiss, not really doing anything here. I bought some stocks. Don't copy anything that I do. And I'm also long on SSLN. So yeah, that's all I've got going. I think Euro Pound and it's tricky. I like the idea of being in what's it called? The Australian dollar still. But again, it's just my cautious side. It's just that little voice in the back of my head. The Australian dollar, it's just too crowded. So we'll see. Anyway, ladies and gentlemen, we have Tiger coming to take over the show. Don't go anywhere. Have a fantastic rest of your days, and I'll see you all tomorrow. Stay safe and don't get margin called.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Well, what's going on, everybody? Happy Thursday. A little bit of a quieter day so far from everything I've been looking at today, geopolitically, obviously economic calendar-wise as well. Did have the weekly job numbers come out for the dollar earlier. Not really much of a surprise over there. About 5,000 less claims than was expected. So very slightly bullish for the dollar, but didn't really get a whole lot of a move out of that. And that's it for the day, other than some lip flapping sessions that we got going on throughout the course of the day. Euro, I think I did see where their retail sales number came out positive. So that was a little bump for the euro itself. When we're just looking at it on an individual currency level, the Swissy right at their unemployment rate percentage as forecast. So that's about it. The big thing's obviously going to be tomorrow, ladies and gents. Got the employment numbers for the dollar and some for the Canada dollar as well. Very same time. So NFP, non-farm payroll, as always, guys, that's an account killer. And what better proof do you need than just go onto YouTube in your free time and just type in NFP losses. There's collages and collections of people trying to play it and just getting burned. So it's definitely an account killer. It's one of those major red folder events. So just be aware of that coming up tomorrow. Yeah, and don't blow your accounts, okay, at the end of the day. So, guys, let me know if you have any specific tickers. Yeah, Bashy, I agree with you. Let me know if you have any specific tickers that you guys are interested in checking out. I still am just in – I'm not in any currency trades at the moment. Still just in that meta trade, guys. This is not a stocks channel, but it just seems like lately that's the main trades that I personally have been in. So, yeah, it's looking pretty good, real quick, since obviously everything translates to stocks as well. We'll just take just a super fast look at meta, just so you can see the zone level on there that I was attacking. It was basically this 4-hour zone off here to the left. So dropped in there. I did get that second chance opportunity once again on a 10-minute time frame. Okay. So from right here, we had a little bit of a 10-minute zone. So that was really my entry point right here, the exit out of there. And as you can see, it's starting to move up nicely, get a little bit of a collection of higher highs and higher lows on some of these smaller time frames. So looking good overall for Meta. And that's obviously because it had a plus 13 score. Okay. Looking really good. Debt to equity, price to free cash flow. Some of those are terms we don't use on this channel a lot. That's the only negatives. But other than that, everything else is looking pretty good. So remember, there is a stock box. I'm pretty excited to see what Nick was talking about earlier. He said he had a surprise coming out in addition to that. So, and then the other thing, guys, for the EdgeFinder, and I know that he put this in one of his videos the other day. I think this is a really cool new tool that he's added in as well, where you can actually take a look at the historic changes from a +5 to a -5 and actually see on a chart how it performs. So it just defaults right to euro dollar. You can see right here where it started giving us that bullish signal. You can see where prices go up. Bullish signal, prices go up. Bearish signal, prices go down. bearish signal, down, bearish down. So it just goes to show you how accurate this thing is once it crosses that +5 or -5 threshold, and it kind of sums it up down here at the bottom. So I'm super stoked about this thing. I used to go on a chart and look at every time prices went from a 3 or 4, to a 5 or vice versa on the bearish side and start plotting it out. Now he has it all in one little convenient spot. So it's just ever expanding, ever growing, guys. If you don't have an EdgeFinder, you got to get it before the prices jack up. Okay. So, it's just like anything else. Prices eventually go higher. So definitely get you a copy of the EdgeFinder if you haven't already. He's just constantly improving this thing. Okay. Seems like every time I turn around, something's new on here, and it's all for the better. So, and then lastly, sick new feature. That's right, Bashy. Lastly, guys, if you are looking for a new challenge account, definitely check out allupprime.com. 35% code is there on the screen. A1 Live, also a QR code as well. Reach out to me anytime if you have any questions on All Up Prime, as it did spend a good portion of last year with the company. So back to the charts. Aussie strength. We're continuing to see all the Aussie pairs. It seems like at the top setups down here, and the same thing on the bottom where it does represent the quote currency. Talking about the pound Aussie shorts, Euro Aussie shorts. So yeah, Aussie strength is a really popular theme right now. So are some of these indices, but the problem is just kind of like what Nick was talking about on his video yesterday, and I think even this morning, it's not giving us any pullbacks. Yeah, I was complaining about this with you guys yesterday, and then I was watching Nick's video afterwards, after my regular work, and he was talking the exact same thing. So I didn't even know that he had talked about it, but just goes to show, guys, you stick around somebody long enough, you start echoing the same things, even if you don't actually witness it firsthand. So really cool stuff. But yeah, just need some discounts on some of this stuff. The stuff's going to the moon. Talking about the indices or the U.S. indices, but Aussie Swiss, Aussie dollar, Aussie CAD, Bitcoin. Nothing's changed on Bitcoin. I am still waiting on that pullback to that 1 hour zone of demand, but it just seems like it's just kind of hanging out upstairs for a little while. Let's go over here to Bitcoin. And we are starting to get a little bit of a pullback. So could this be the drop down into the 1 hour zone of demand I was looking at 78.8? We'll see. Okay. Now, just to recap on this. So it's actually within this zone is actually giving me my confluence look, if I can grab it, because this whole thing does represent, come on now, a 4 hour zone right here. I just didn't draw it in because I was more focused on the lower time frame 1 hour. So there's my 4 hour, and then, oh no, I'm sorry, guys. That is the 1 hour. It was the 15 minute. You stare at charts all day, you start getting confused on all the time frames. Was that a 10 minute? I already forgot what time frame. Yeah, it was a 10 minute. I'm sorry, guys. So started off as the 1 hour zone, which is obviously the green rectangle. But then from here, this is where I found another gap on a 10 minute. And I know, again, you start getting down to these smaller time frames, it gets noisy. It definitely does. But I've got a 10 minute and a 1 hour set of eyeballs on it with gaps. This is the important thing. This is the important thing, showing the inefficiency in the market at that particular spot. So I'm still interested in that 78.8, but hey, it very well could grab the 1 hour proximal line and bounce from there. But that's just kind of the trade-off you get. This improves my reward risk if I wait on that 10 minute. But there's a chance the price could hit the 1 hour and just take off without me, right? So there's trade-offs either way. You can get as granular as you want on this stuff. But if you get too granular, sometimes you just miss the trade. And I very well could miss it. But my personal rule to myself is I want to see at least 2 sets of eyeballs at the same area with an inefficiency in the market. So that's my trade-off. If I miss it, great. I don't make money, but I didn't lose any money either. So better RR is that 10 minutes. So again, a little more of a day trade, not necessarily a shorter term swing trade like I'm accustomed to. I don't do a lot of these shorter term trades like this, but that just so happens to be the picture that it's painting for me at the moment. Just waiting on that area because I don't really like any of this area up here at all because I didn't really get any strong gaps. This is just like baby candles. Okay, this is my algorithm is painting up a zone of demand. I don't like it. Okay, it's a little higher on the curve. This is kind of the lower part of the curve. If we're just kind of isolating this basing structure, this support or basing structure here, and that was the point the last point, okay, before we had that push up. So that's why I'm so interested in that. I just feel like there's no strength in these exiting candles from what my algorithm's trying to paint up. So yeah, again, it very well could hit that zone and just fly off, but I'm waiting on the higher probability setup down a little bit lower. So, so yeah, that's Bitcoin. Let's have a look at those Aussie pairs. Are they getting anywhere close to my supply or to my demand zones? Let's go look. Aussie Kiwi, Aussie dollar. Aussie dollar is probably my favorite right now. So we'll take a look at it. Aussie CAD as well. So Swiss, dollar, and CAD. Okay, here's Aussie Swiss. Trends up nicely. It's looking really good. And kind of a similar situation. So I drew up a similar situation to Bitcoin. So there is a zone of demand a little higher on the curve, but it's just not giving me the look I want. It's too many candles to the left. The gap is there, but it's not that great. And price bounced off of this overhead supply and didn't even shoot through it. It just started retracing back down. So that tells me that there's probably not a lot of strength in this zone of demand right here. Okay. So I'm just going to let it fall right through. And I know I kind of drew up a projection line, but when I drew this projection line, it's back when price was still over in this area. Okay. But what happened? Well, overnight and throughout the rest of yesterday, it started coming back down again. So that right there was kind of my moment, meaning now I'm not interested in this dinky zone as it is. So I'm going to ignore this. In fact, I'm just going to delete it so that I don't have to look at it. And now I'm waiting on the retracement to the zone down here. Talking about this 4-hour zone down here. We had a little bit better of a gap, and it did kind of retrace into the gap a little before before pushing off. But that's about as good as it gets. And this is a strong asset right now. Again, we're getting a plus 11 score. So when we get a score that's very bearish or very bullish, okay, 9 or 10 or higher, I'm a little more relaxed on how deep I want my retracement. And I talked about this. Well, I talked about it on some other material I made, but like that's an example where I would consider a 38.2 retracement if we're talking fibs. I don't do that a lot. But if something's giving me a very bullish or a very bearish setup and there's a decent looking zone that's, it's not retracing down below the 50 or the 61.8 level, I'm okay with taking that. They work out pretty decent. If it's +5, I personally, and everybody may be different that uses EdgeFinder, but I personally don't have any interest in a 38.2 or something that's higher up on the curve. Remember, fibs are drawn up from a swing low to a swing high. Okay, in general. So yeah, if it's just limping across, again, I make the joke, if it just barely made the cut, if it's just barely tall enough to ride the ride, I want a little bit more of a discount. If it's stronger, I'm a little more lenient. So in any event, because it is so strong, it very well could grab this ugly looking zone and just run off to the top. But I don't like the structure. And the main thing is it did not break this structure over here. So that's why I've got zero interest in all this. It's not an impulse leg. Remember, I try to find my zones from an impulse leg. An impulse leg, by definition, it breaks a structure or change a character, okay, if it's reversing a trend, whatever the case is. But at least this zone down here broke a structure because it broke this little double top over here. None of this looks attractive because once price came up to this area, it just kind of went sideways for a while. It finally broke through. But, it didn't do it in a timely manner. The momentum was terrible. And this was this right here, because all this price action over here pretty well took out what unfilled orders was in this zone here. I didn't really have that much interest in taking even this area here because the zones just didn't look good on smaller time frames. I don't want to go too small on this, but it's still high on the curve. So at least this green projection drawing I drew up, at least that gives me a pretty decent discount. So that's what I'm waiting for Aussie Swiss, the 55 half level. I've been beating this like a dead horse lately. I've been talking about the same level, but none of this newer price action has created anything that looks appealing to me. None of it. If this candle would have broken a structure like this would have been more attractive. Okay. If let me just redraw that right here. Okay. If that would have continued and closed ahead, that's a break of structure that turns this into an impulse leg. But we didn't get that, did we? Okay. We didn't get it. It started getting lazy and going down again. So the second it does that, I ignore it. I wait for a better discount. Obviously, stop loss below all that. So that's what I'm looking at on Aussie Swiss. And then going to Aussie dollar, which is, I do believe, the number 2 on our list. Yeah, +9. So very bullish. Okay. Talking about all the fundamentals, the sentiment, the technicals all combined. You had the strong uptrend. You had a couple weeks of basing, and now we have a newer series of higher highs and higher lows. So I like to see that. And I already know that the daily is going to give me a 8 over the 21, so I don't even have to worry about looking at it. 50 is above the 200 on my execution time frame. Okay, whether that's the 4 hour, the 2 hour, the 1 hour. I always like to look at the relationship of the 50 and the 200. That's just me personally. It's a popular one. I know, again, it just depends on what your eyes see better. Okay. For me, that's what my eyes see is better when I look at that relationship, 50 and 200. Now, that's just a mechanical way of looking at it. It's not the end all be all. I still want to see the actual physical higher highs and higher lows, which is exactly what we're getting. So we're good. And then just look for a retracement. Okay. Retracement to a zone. And I kind of drew it up already. I think I might have even talked about this one yesterday. Yeah, I think I did. I think I talked about this one I do a few other projects, guys. So sometimes I get my projects mixed up with which audience I'm giving it to. But just to brief you through this is obviously the zone of demand I'm looking at. On this 1 hour time frame, the volume is not good. But when you drop it down to some smaller time frames, the leg out candle, the volume is growing. So you just can't see it on this daily or this 1 hour. You got to go to a smaller time frame. But anyway, at the end of the day, I want this. I want price to drop into the zone, but I don't want to just buy just because it touches the zone. I've got to see this break of structure, this new impulse leg. I've got to see a new impulse leg form if it breaks this structure. Okay, again, this is just me projecting it out. I'm not saying it's going to look exactly like that. And in fact, you can tell it's already moved. Everything's kind of shifted over. So the point is, I want to see a break structure. I want to see a newly created zone of demand form on the impulse leg. Remember, this is the impulse leg. Okay, it's an impulse leg because it broke a structure. Those impulse legs are where I always try to find my zones, whether it's a supply or demand. As far as the entry, now the exit's a little bit different. I'm a little more lenient on the exits, but when it comes to the entry, it has to show a change of character or a break of structure. This, by definition, is a change of character because we got pushes down, constant series of lower lows and lower highs, and then all of a sudden we have a higher high. Okay. Now remember, this is only 50% of the way there because I have to have a series of higher highs and higher lows so that I can confirm that I'm actually looking, going to start going into profits. But this takes away half the worry right here. Break a structure, then look for a demand, and this is the anticipation. The anticipation is we get that new zone of demand and we buy from that new zone of demand. Or at least that's how I see it. That's the way I've been doing it. So really awesome. These confirmation entries have saved me from countless losses because it very easily could just shoot right through that zone. Okay. And if it does that, that's fine because I didn't buy because I waited for this to happen. And then a discount from this. So it's a little more in depth, guys. Sorry if that's too much. That's just how my brain works. So anyway, guys, let me know if you have any. Let me know if you guys have any tickers. I'll go through some more of these top setups here. But yeah, that's Aussie dollar. Nothing I can do up here. We're bouncing into supply. Last thing I want to do is buy in a supply zone. Okay, supply zone did create a little bit of a gap down, but it's not enough that I'm worried about it. It's just that I don't want to buy anywhere near a supply zone. Just like if prices comes down here, I don't want to sell just ahead of a demand zone. I don't want to do it. It's got to break through it. So this is where, if you are wanting to buy and be a little more aggressive up here, and I know the guys talk about this a lot, just wait for that break to the top and then a retracement for some possible buys. Okay. So this is a little more aggressive because you're higher on the curve, but you're ensuring you're getting through all the noise over here. And then you look for your discount and then you go, okay, break, retest. And that's essentially the way I would look at it too. I just would be picky about, okay, break, but when it retests, I better have a zone there. And so far on the 1 hour time frame, I don't like the picture because there's too many candles to the left. Okay, the reason I like this area is because that's like one candle, 2 candles if you include this puny one over here, with a little bit of space between before you get to the next set of candles. But even at that, that's just kind of a continuation of a trend. This is doing nothing but just going stagnant, going sideways, and rightfully so, because it's in a zone of supply, which is where unfilled orders are fighting it from continuing to go up. So yeah, I stand by the green line on the bottom. That's really the path I want to see on Aussie dollar. Obviously, if we're just looking at geopolitics of it all, we're obviously still in the ceasefires, and you do have a little bit of skirmishes going on with Iran, I guess, sending their fast boats out. But President Trump said it's like, sending a peace shooter into a fight against the military or something like that. That's kind of funny. But the point is, and I know that we do have about a day left, because he said something about 48 hours yesterday. We'll figure something out in 48 hours. So there's about a day left of that. Of course, we all know how that goes. So I say all that to say we're overall in a risk on environment. If we're risk on, then I don't know that I want to be worried about, I don't want to be buying dollar. I want to be selling dollar. I want to be buying some of the riskier assets. Aussie tied to gold. Okay. Commodity currency getting a little bit of a boost up. So that's the geopolitical look along with the EdgeFinder look. And that's just a really good formula, not to mention the higher highs and higher lows. The trend is looking good. This is a really good asset, guys. Okay. But got to have a discount. And if you take a look at recent price action, you see all these points where price dropped quite a bit. Retracement, okay? Retracement. I have to reasonably expect to get about the same size of a retracement. And that's why I drew up the green projection line like I did. Because even in strong trends, you're still going to have, drops down like this. Drops down like this. Okay, well, I have to reasonably expect to get at least the similar, a similar size of a pullback like I did over here. Try to look at that sometimes. We all get so fixated on a trend. Kiwi dollar, yeah, Jeremy, I'll look that up next. We get so fixated on following a trend following that I think oftentimes we don't think about this. We don't think about the pullbacks that happen within your strong trend. Okay. It's already proven itself. It's proven the pullback size, the pullback strength. It's pretty consistent too. So reasonably expect for this to happen when you get to a swing high point. Same thing is true in reverse if we're looking at a downtrend. Okay. So hopefully this right here, if nothing else I say does anything for you guys today, try to think about this concept right here and those pullbacks. Okay. That'll help you a lot. Kiwi dollar. Yeah, let's have a look at that for you, Jeremy. All right, so EdgeFinder, obviously the first step, always, see where it's at on the EdgeFinder. It is neutral, but I want to see exactly how neutral it is. See if it's close. Where is it? Okay, yeah, +3. So good on the text, just barely. Really good on the relationship of smart money and dumb money. Talk about the CO2 report, the put call ratio, the retail sentiment, all that. Okay, it's giving a nice bullish signal for the Kiwi over the dollar, but the fundamentals is where it's getting us right now. So we got imbalance in analysis. Let's go have a look at the technicals though, so we can at least get that part knocked out. Start at a day time frame over here. I've got my 8, which is the dark red. Got a lot of drawings up here. 8 above the 21 EMA, and the alligator mouth is, what's it doing? Is it opening or closing? If this is the bottom jaw and this is the top jaw, it looks to me like it's opening up, right? All right. If it's opening up, no matter if it's an uptrend or downtrend, that means it's trending. And even the recent price action of it is trending. Okay. So I like it. I like the daily look. I just don't like the fundamental look right now. Okay. Not at the moment. So we've broken this, rather sturdy looking overhead resistance. Okay. This was a resistance point. And I'll change this to a 1 chart look now, make it easier. Okay. Pretty strong overhead resistance. Well, that's not a surprise at all because we were trying to chew through this daily supply. this daily candle right here that had a gap to the downside that broke structures and broke former support resistance lines, those blue dash lines you see. So that's where our trouble came, and that's why we got such a strong resistance, because we were chewing through an overhead supply. Get this out of your way. And I'm going to turn off my master pattern. Okay. So you had all this consolidation, which is exactly what my master pattern tool is drawing up. Consolidation. Okay. In general, I don't want to trade anything in this area. And it depends on the time frame you're looking at. I just so happen to be looking at this on a daily. That's your retail chop zones, guys. That's where traders come to get chopped to pieces. Remember, for me, when I'm trading supply and demand, I want to find those supply and demand zones outside of those fair market value areas, the extremes. Okay, that's why I drew one up down here on a 4-hour. This 4-hour zone of demand was below all this retail chop. So it's more extreme. These are the more institutional zones that I look for. So what happens? Price dilly-dallies sideways, fair market value. Buyers and sellers are agreeing. Okay, demand and supply is in equilibrium for the most part, within about a 60 pip range there. Okay, and then you get that all of a sudden that break to the bottom, which is where you're testing this liquidity from these buyers that pushed price up, from these buyers that pushed price up, and even buyers up here that just put in a wide stop loss. Perhaps they just put it down here, under this swing low. Okay, so there's liquidity there inside of the unfilled orders from the zone of demand. The zone of demand is strong. This is just one big puzzle, guys. Rewind this if you have to, okay? But this demand had a lot of trading activity, a lot of tick volume on the exit candle, the leg out candle, okay? That's effort, match, and result. Wyckoff method, okay? One of the main pieces, one of my favorite pieces of Wyckoff. Effort, match, and result, because you had an expanded range candle, but you also had an expanded range candle on the VSA, the volume spread analysis. So that's effort, match, and result. And then you had a gap. You had a gap right here showing the inefficiency in the market, which is what I want to see, where it's showing demand heavily exceeded supply and just chewed right through and pushed. Okay, broke structures. But then again, after this spot, that's where you bounced into that overhead supply. That's where you started getting all this equilibrium. And so the whole point of trading, the way I do it, is just to wait for the breakouts of those contraction areas, find a zone of demand with all those odds enhancers I just listed, take price to the upside. Because then after it left, expanded range candles, messed around for a little bit longer in that zone, retraced, and now we start a new series of higher highs and higher lows. Hopefully I didn't over-explain that. That might sound like a lot. But you asked for me to break it down, my friend, so there you go. So where are we at now? Well, this still remains a retail equilibrium, a retail chop zone. So now that we've broken through, though, if you wanted to be a little on the aggressive side, you could probably take a look at this zone of demand, but you just got to keep in mind, if I draw this up for you real quick. Time I got 2 minutes. Okay. So yes, this is drawing us up a demand, but remember, it is still inside of this daily consolidation. So it's right in the center of it. Now, it's a little riskier, but it does spit out a 50% line. Now that we've left this zone, it kind of in a way resets things a little bit, because now we're just seeking higher supply. So the focus kind of shifts higher up. Well, if that's the case, then I can actually take a look at a potential retracement to this zone. There's a 50% kind of a middle line that comes out of that daily consolidation we just looked at. So at the end of the day, yeah, I would look at this as a potential buy. Just looking at it on the technicals. Now, remember, it's not on the EdgeFinder, but just assuming this was giving us a bullish signal, absolutely, because now our demand is giving us 3 expanded range candles in a row, green bullish candles coming out of the basing action, with my favorite, the gap showing the inefficiency in that particular spot. So that's what I'd be looking at. Don't buy the fair value gaps, guys. Wait for the unfilled orders on the opposite side. That's where the true liquidity is, and that's where those potential reversals happen way more often than if you're trying to trade the gap. Okay, ignore what you see on YouTube. because keep in mind, they're only going to show you the winners. They're not going to show you the losers like Nick talks about. Okay. Or like I do. I've showed you guys some of my losses. So that's what I'd be looking at for Kiwi dollar if we can get, if we can get something up. I wouldn't be putting in a full position though. I'd be taking a little off because we are still in that equilibrium state. Full position would be further down at the next zone of demand. That's a daily. So I'll end it there. Zone of demand down here. I'll end it there. Hey, it'd be nice to see if we could get a little bit, get that back on the bullish list, because I'd be interested in trading that as well. I hope that makes sense, guys. Look, have a wonderful day. Not a whole lot going on today. We'll just be looking for some geopolitical headlines. Never trade off the first one, though. Make sure you get both sides, no matter who's right or wrong, okay? Geopolitical headlines, there's two sides to the story. Tomorrow's NFP. Have a wonderful day. We'll talk to you tomorrow.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.